everyone, and I welcome you all to a very special event celebrating the first year anniversary of ZoomStocks, where you will hear from some of the top market experts about their views, what they think about the recent IPO wave in India. And this is quite opportune as at this point in time, you see a whole new swell of investors who are entering the Indian markets like never before. And India is on a mammoth and a massive financial empowerment drive. So this is, I think, very timely for the new investors as well. All right. So once again, I wish all our viewers a very nice afternoon. Those who have joined us live and those who will be joining us live shortly. So welcome to the show. Talking about ZoomStocks. Now, ZoomStocks at our heart and our vision has always been this drive and desire and passion to bring investor to the centerpiece of the equation and empower them. And how do we empower them, right? So empowerment by connecting them with each other and experts, empowering them by moving the complex away from the equation and giving them very simple, easy to use tools and features where they can track the stock markets and the stocks that they love. Things should be simple, right? That's what we believe in, and that's what I think majority of the investors want. And also, how do we empower them? We empower them by giving tools that inculcate in them the tenets of responsible investing, tools which allow them to practice this, invite them into their real life financial decisions, and they can practice these skills. Of course, there are rewards for them to win. So we do this via our stock picking contest, which is called Big Bulls League, and anybody can participate into it, and it's totally free. It's for the investors' benefit. And finally, how do you empower the investors? You give them a space, you give them a room where they can at length and at full freedom express themselves as they want, as they desire. Rather than always listening or reading to what an expert has to say, they should also have an opportunity to reflect to the whole world what they think, what they feel about the market, what their experience has been. And that's where our blog section comes into the picture. And it's free for everybody. As long as you are writing good things, we will publish your blog. So it's a great, I think, opportunity for any enthusiast of stock markets where they can simply be heard by a larger audience. Okay. So now, just moving on. So sorry for the pause there. So I was just putting my thoughts together. Now, as Indians, we have always accepted what the world has to offer us, and we really, lap it up. We thank them for the wonderful tools and the sites like Facebook, Twitter, Instagram, and we make that part of our daily lives. I also feel, this was a very critical moment in India's story where people are rushing into the stock market in large numbers with a lot of hope and desire that is going to totally change the way the financial reality has been so far. So it's high time that India has a place, has an address to call home, which they can show to the entire world, like this is where the Indian community comes together and discusses about the stock market. So so come one and come all, I invite you all to join ZoomStocks. All right, and now let's just go over to our guests and meet them. We have a very august guest panel over here, and let's go over and speak to them one by one. Hello, Ramesh Mantri. We have with us Ramesh Mantri, who is the Director of Investments and Principal Officer at IPO Capital. Ramesh, it's a sheer pleasure to have you with us on our show, and we look forward to having a wonderful conversation.
Thank you, Kunal, for inviting us.
My pleasure, my pleasure. So next we are moving on to Mr. Bala Pathasarthi. He is the CEO and co-founder of MoneyTap, and he's also the chairman of FRIO. And what you all do not know, he's also very good at scuba diving. So welcome to the show, Bala, and very happy to have you there.
Thank you, Kunal. My pleasure.
Absolutely, absolutely. Same here. And finally, we move on to Anuj Kapoor, who is no stranger. He's the managing director and head of investment banking for UBS India. Anuj, wonderful to have you here on the show with us.
Hi, and pleasure to be here as well.
Yeah, so I hope the viewers are already excited by the wonderful panel we have here for the benefit of investors. And I would like to make a point here. So, from a small seed comes a giant tree. And to all the big things, there is a very humble and a small beginning. And that's what we are, ZoomStocks. At our core, we want to empower investors and give India something that they can proudly present to the world. This is the right. So, in the same way, we have had a very small, short, and a sweet first year. Let's look at a video which will just highlight some of the sweet, short things in our first year. Let's have a look at the video. So I hope you enjoyed that small little video, and the samba music was selected by my team. If you were tapping your foot, I will give them a bonus. So, just to add on to that small video, the participation in Big Bull Sleep is increasing day by day. So we are seeing a good participation and interest of investors and new users. And more and more people are regularly interacting with each other and discovering the power that ZoomStocks has to offer. And people are also starting to take interest in penning down their own thoughts in our small little blog section. So it's all moving, and by the grace of God, we'll be doing brilliantly as the time goes on and serve the needs of investors. Okay, so I think now is the time to start up with our August panel here. And first, we will try and go over to Bala Pathasarthi, who had a lot of issue connecting to us, but we are finally happy to have him here on the show. Thank you, Bala. So,
My pleasure.
are you ready now? Are you ready?
Yes. Yes.
Okay, great, great. So, Bala, what do you feel? Is it a wave? Are we in the middle? Are we in the start? And have you participated in this wave? What do you feel about this IPO wave?
Yeah. No. Absolutely. I feel like I'm a part of the team that is sort of surfing the wave on all sides, both as a retail investor, as well as an entrepreneur.
Wow, very nice to hear from you. Any specific favorite that you have, Bala, in this IPO run so far this year?
I don't know. um,
Yeah.
I'll answer the question
Okay.
later.
Yeah, yeah. Okay, so next question is an interesting one. Your friends over at MobiKwik, who are other leaders in digital payments, and BNPL, which is buy now, pay later products, they are just going for an IPO. So your thoughts there, Bala?
We are super excited, and
Great.
they're really paving the way for a lot of other fintechs as well. So the whole fintech industry is watching them. I can tell you that.
Okay, okay. Wonderful, wonderful, and very nice to hear from a peer to the company. I really appreciate your spirit there, and wonderful. So now, Bala, Frio and MoneyTap, you are already moving, close to being a unicorn, another one in this huge list that India is proud of, right? So from an IPO perspective, Bala, if you do have your vision set on it, where
Yes.
is Frio and MoneyTap right now in that journey? What stage they are in before they could go IPO, and are you going to do it?
The short answer is yes. About 12 to 18 months away, I would say.
I'm sorry, I could not get that.
12 to 18 months away, I would say.
Oh wow, it's wonderful, and it's good to hear that you are looking to go that way. That's the bigger part.
Yeah,
We will wish you all the good luck,
absolutely.
Zapala. Now let's move on to Ramesh Mantri, who is a very respected market expert in investments and has all the charm and aura to share with our viewers and his pearls of wisdom. So, so Ramesh, quite a wave of IPOs, surely, and have IPO figured in the investment strategies of White Oak Capital? And how is the outcome so far that you are seeing, even though the time that has passed is quite little from a time horizon perspective? And even in case you haven't added IPOs to your portfolios or your strategy, still, what are your favorite picks? I mean, is there any one particular that caught your eye?
Sure. Thank you, Kunal, for the nice intro. See,
My pleasure.
IPOs are a subsegment of the market that we invest in terms of the opportunity set, right? The new companies coming to
Right,
the markets. And for White
right,
Oak, just like we evaluate every company on its merit, we evaluate every IPO actively. In fact, engage
right.
with companies often early in the IPO cycle so that we can spend enough time to understand the businesses in detail. There have been a
Right.
few cases where White Oak has also participated in pre-IPO, where pre-IPO, interesting pre-IPO transactions. So we are very active investors in IPO, but as is they said, each company is on its merits. And the IPO portfolio, IPO investments we have made in 2021, and of course, it's been a stellar year for IPOs. And even our experience has been similar. And
Oh,
the pipeline of IPO that's out there, including some very interesting businesses driven by technology, new consumer businesses, whether in consumer tech, fintech, going public. That's something. It's a very interesting pipeline, and we really look forward to those IPOs.
wonderful, wonderful. And what a brilliant answer. I mean, it's really enriching, and I think viewers will also appreciate the kind of depth and precision Ramesh has followed here in answering this question. And that's what people need to take a leap out of this whole show here today. Just look at the depth, these wonderful experts from different fields talk, and how steady and measured they are in their approach. So great response, Ramesh. I really thank you for that. And just another question on the side. So compared to 2017-18, where we had about 51 IPOs, roughly about 93,000 crore rupees worth. And then in 21-22, we have about 36 IPOs worth 66,000 crore rupees so far. So we can definitely see a momentum going. Now the financial year still has a way to go, a long way to go. Do you think this momentum is going to continue? And if not, what could change?
Sure. So after 2017-18, there was a 3-year pause in IPOs, right? In the sense that large scale IPO cycle had stopped. There was a big correction starting 2018 in small cap and mid cap. And as you know, most IPOs tend to be, in terms of number, the majority tends to be small caps and mid caps. And 2018 was an extremely challenging year for small cap, mid cap stocks. And that continued in 2019. And then 2020, when things started looking up, the pandemic happened. So clearly, the last 3 years has been challenging. There was a big stop in the cycle. 2021 with Indian markets have been extremely resilient this year. And of course, there are very good reasons. Corporates are doing exceedingly well. Corporate cash flows, profits are very strong despite the recent second wave. And of course, globally, a lot of factors are aligning in favor of India, including the opportunity, the success that initial phase of PLI scheme has seen. So investors globally, like the investment opportunity in India, and there have large number of companies have been able to go public. The difference this time has been that you are seeing very interesting tech-driven initial signs. You had the first gaming company go public in India, and then you had, of course, the big bang Zomato IPO, of course, there is large. I think everybody looks up forward to the Nike IPO. You had car
Yeah,
trade in consumer tech. There's Paytm on the pipeline, and of course,
absolutely.
and I would say this is the beginning. I think this is the
Yeah,
coming of age of the new
right.
entrepreneur in. See,
Absolutely.
if you look at the past success stories in entrepreneurs, they often
Yeah.
came from old business families, right? But
Ye-
this time,
Yes.
Zomato proved to the world that people can come out of college, and in like a dozen of years can create a company which is worth $15 billion. So that is
Yes.
today the risk capital is available in India. you know 20 years ago you couldn't imagine being raising money from any angel investor, or but
True.
today
True.
the
So true.
capital is available by different investor pools, from venture capital funds to large and angel networks. And so we are seeing the coming of age of the new entrepreneur in India. And this is great for the country because it is bringing tremendous dynamism in the economy. The new entrepreneurs are disrupting and changing for the better how India operates. So we clearly look forward to a number of such IPOs, and we will evaluate every company on its merits.
Amazing, amazing. I mean, I just can't be more thankful for such a in-depth response, Ramesh. I mean, I'm a pleasure to hear your, deeply, deeply valuable words, thoughts, and like how the mid caps were, just on the sidelines for a while, how the IPOs dried up, how the new phase has started, and as you said, this is just the beginning. And the risk capital and how the entrepreneur environment is just moving forward at a great pace. It all bodes well for India. Great, Ramesh. Thank you so much for your thoughts there. Let's move to Anuj Kapoor now from UBS. Hi, Anuj. So let's get some questions going for you. Yeah. Okay.
Sure.
Yeah, great. All I was going to say is that as we just spoke with Ramesh, there have been 36 IPOs worth 66,000 crores so far in India. So, I mean, at what pace are the things coming into the investment banking industry? And how is it all of it getting absorbed, or what is the scene with the investment banking industry, with IPOs in particular right now?
Sure. I think uh, what we are seeing in terms of the deal activity, as well as the pipeline
Yeah.
that's building up in the market, I would say from a banker standpoint, this is the busiest time we have seen in the markets, or I have seen in the markets over the last 7 or 8 years. And clearly, last year we saw the pickup in markets post the striking of the pandemic in India in March. April, May was a lull, but the way the markets looked up from June onwards, there's been no looking back. And we've seen a sustained period of activity over the last 15, 16 months, and the outlook continues to remain positive. I think last year was dominated more in terms of issuances in the equity markets by secondary issues. A lot of QIPs and rights issues and a few blocks also happened. This year, we're seeing the market dominated by IPOs. Roughly about 40 to 45% of the equity volumes have been through primary issuances through IPOs, as well as quite a few block monetizations as well. Given the rich valuations, people are looking to monetize their gains as well. From an outlook perspective, I would still say that it remains positive, and I do expect the flurry of IPOs based on the pipeline that we are seeing, the filings that have happened, and more of the IPOs or companies preparing to come to markets. I think pretty promising from an outlook perspective going into next year.
Wonderful. That's a look at the investment banking industry. We do not get to hear so closely from an expert. And another question to you, Anuj. So and now let's talk about the very not the regulatory frame. The framework is quite stringent, right? And quite understandably so for IPOs. Now, has there been any significant changes in the regulatory framework which are driving the IPO markets at top speeds, or if they're not, there haven't been any such changes so far? Do you think there are some in particular that might help push the activity in the deal market, in the capital markets at a much faster pace?
Yeah, I think some of the recent regulatory changes have been driven by some of the constraints posed by the pandemic. People sitting at home, roadshows today are happening over Zoom, and it's pretty much proven that you don't need to travel and get in front of people in person to attend meetings and things like that. That's the dynamic change that the pandemic has brought about in the industry, in the investment banking industry. But more specifically, the changes that SEBI has pronounced, whether it's to do with the rights issues, trying to curtail the period of rights issues, or to do with exemptions as far as some of the filings are concerned or the audited accounts are concerned, and also in terms of crunching up the timelines as far as IPOs more specifically are concerned, partly have been driven by constraints posed by the pandemic, as well as partly by perhaps the need of the hour to implement some of these progressive changes. I think the more we are going to see the use of technology, and I think that's a theme that still needs to play out completely in terms of the life cycle of an IPO or a capital markets transaction in India. We see changes happening. And again, it's not straightforward in a vast country like India, where still quite a few people don't have access to terminals or electronic means. But we will see technology being a big disruptor as far as IPOs and capital markets in general is concerned. That's what I expect on the way forward. SEBI on its own, yes, is continuing to make some changes. Some of the recently announced changes around crunching the timelines as far as promoter lock-ins are concerned, also allowing them to access the markets much quicker post an IPO through a QIP, and aspects like that are only progressive, and it will help markets in general. I think one of the things that Ramesh mentioned, the coming of age of the Indian entrepreneur and the whole ecosystem that's been created around it. Clearly, we are seeing the building blocks of India is already one of the top 3 internet tech destinations in the world. But we do expect that, this aspect or this industry playing out in a big way, and some of the Indian business models becoming powerful and strong enough to disrupt business models globally. I think some of these tech companies are going to attain global scale and size and are going to compete with the best in the business across the globe, and hence making some of the changes around, for these specific to these tech companies, because the way they fund themselves through various rounds in the private markets before they come to capital markets, it's quite different from a traditional brick and mortar company. And hence, changes around promoter rights, which the SEBI is already contemplating, differential voter rights and things like that, are also going to be quite conducive as far as the development of the capital markets in India is concerned, specific to the technology sector.
Wonderful, Anuj. Just enjoyed the depth which you presented to us all behind the scenes. It's really beautiful to hear such a chain and a properly woven string of thoughts about the industry as well, and how the regime is moving towards making it more conducive, and how the business environment is making sure the business models are viable and can challenge the best in the world. And beautiful words there, Anuj. Now, before we move ahead, the Big Bulls League contest that we spoke to you about, where anybody is free to go and participate, and we give away some modest pool Amazon vouchers to the winners. Let's take a look at what some of the winners of our Big Bulls League contests have to share. Let's hear them.
Big Bulls League is an opportunity to improve your stock market knowledge and win exciting prizes.
I really enjoyed this Big Bull contest. It improves my stock picking skill. It is a great platform. I am very happy to win first prize. Thank you.
बिग बुल्स लीग एक ऐसा कंपटीशन है जहां हम जीरो इन्वेस्टमेंट से बहुत सारा प्राइज मनी जीत सकते हैं, और मैं बहुत फॉर्चुनेट हूं कि इस बिग बुल्स कंपटीशन की मैं एक कॉम्पिटिटर हूं और मैं एक विनर हूं.
Knowledge and skills are developing day by day by playing Big Bulls League. Thank you so much ZoomStocks for organizing this amazing contest.
Big Bulls League really tests our stock picking skills and our knowledge on stock market.
ZoomStock एक बहुत ही अच्छा प्लेटफॉर्म है ट्रेडिंग को लर्निंग करने के लिए.
Big Bulls League is an amazing tool for investors.
I'm really happy to win this contest and it was a great experience for me.
Wonderful. I hope you all enjoyed listening to all these real world people and what their small, sweet little things they have to share about the contest. And I hope you all would go to zoomstocks.com, register, and play our contest and benefit from it. Okay. So now let's move on to Bala again. Bala, back to you. So now Money Tap Frio, it's an exciting thing that you are doing at your end. So what's really growing besides your scuba diving legends? Can you just highlight some of it? Is it a neobank that we are going to see soon?
Yes, Kunal. So Money Tap was sort of the beginning of our journey, where we started as a platform which had a credit line, which was a very unique product, specifically for Indian needs. And now we have disbursed probably more than 7,000 crores, and now we're sort of morphing into Frio, which is a neobank. And again, sort of back to the IPO theme, I think companies like Money Tap and many others, having an IPO market, it sort of it provides a very nice end point and a goal for entrepreneurs to shoot for, in terms of liquidity for both for themselves as well as their investors.
From your corner of things. So now moving on to next question. So why do you think, Bala in particular, why are so many companies in large numbers are rushing for the IPOs? I mean, is it the ease of the foreign money coming into India, the liquidity, or they are positioning themselves against more unforeseen circumstances like this pandemic in future, or trying to move up to a level to ward off the competition before it starts rearing its head? So what is your take, Bala? What are the reasons for companies rushing for it?
So I think an opportunity, and there is a window, and everybody is same thing that we are all seeing, and that's kind of the nature of markets. So when there is a window, everybody rushes into it. Some will take advantage of it, some will be able to raise large amounts of capital, some won't. But overall, I think it's terrific for the ecosystem because it finally makes India come to the Indian ecosystem come to fruition, right? If you don't have IPOs, then it's just one company buying another company. There is no liquidity for private investors. It sheds sunlight, I think, into the startup ecosystem in a way that nothing else can do. And I think SEBI has been a terrific regulator in terms of allowing all of this to happen. And so it's quite exciting as a founder, I can tell you that.
Great. Good words from you, Bala. Happy to hear those perspectives. Now, you have been a VC yourself, right? So talking about ecosystem, you are the one who has a very nice bird's eye view, like what's actually going throughout the country, how the young investors are getting impatient to make their mark on the stage, right? So multiple rounds of investors, a lot of private equity coming in, and maybe a mix of debt as well. So what do you think the point is where a company cannot rule out the IPO option anymore?
Yeah. So I started Prime Ventures. Prime is is probably the number one seed stage investors in the country. Okay. And when we started it in 2012, there were no IPOs, right? So it was one thing to sort of invest and then you wait and hope that somebody buys you out. And this was always the complaint our LPs, our limited partners would have. These are typical foreign, endowment funds and large institutions, which would say, "Hey, your Indian ecosystem looks good, but how do I ever get out?" Right? And I think this was the reason why not enough money was been flowing in, and the money all went to China instead of India. And I think now with all of these companies going out and at least an opportunity for the investors to get liquidity, I think this is going to power a lot more money coming into the early stage in the ecosystem as well. And clearly with what is happening in China, I think we have a moment in time where it's kind of our time time, Abhi. So I think we need to take advantage of it. And our country obviously has enough entrepreneurs. That's never been a shortage. It's just that capital has been the issue. I think we can get capital even at early stage in private markets as well, because now there is an end point, and people are looking at the end point saying, okay, I can get out.
Wow, wonderful. I mean, that's really valuable insight. Like how waiting to get being bought by another company as an exit route, and with all the things going to China to the stage where we are in currently, where the ecosystem can have anybody dream of being a unicorn very soon. So brilliant take there, Bala. Thank you for your insight. Let's move back to Ramesh. Ramesh. In the IPO market, there are various time period restrictions on the anchor investors and the company owners, the promoters, before they could start offloading their stake into the market. So, what is the market psychology? How should investors prepare and react to such instances, critical instances in the market?
Sure. So, now that you have new set of companies going public, and what Anuj had alluded to, that you have two sets of investors. You have the promoters, and you have the financial investors, which can be venture capital, private equity. And recently the regulations have been relaxed, which is a positive, because remember that the longer you make things for people to get out, the difficult the exit door is, the shorter is the entry door is to investments. So if you make exits easy by regulation, investments become easier for people to make. Number two, the shorter 6 months restriction now on pre-IPO investments post the IPO will encourage a number of public market investors to invest in pre-IPO situations. And that itself will create two things. One, it will start providing initial liquidity. Number two, it will start setting up benchmark valuations, and also will allow certain kind of companies to get the kind of investors they would like them as long-term shareholders. So the change in regulation is a win-win. In terms of selling post lockups, I think it is very expected that some of the financial investors, private equity will sell, because they have to monetize and again reinvest that capital back, right? Because they have to deliver returns. They have to demonstrate that they've delivered returns to clients. And often,
Right.
usually what happens is when you give back investors great return on a smaller investment, investors end up putting a lot more money. So when the exits become very exciting to investors, you will actually see a lot more investment, which is what is happening now in the consumer tech ecosystem. As exits are getting very lucrative, huge amount of investments are started happening. So it's creating a virtuous circle of value creation, and it's creating tremendous. It will create a lot of dynamism in the economy. So I would say all
Wonderful.
these regulatory changes are quite positive for the whole ecosystem.
Wonderful. So, Ramesh, what is now? Let's talk about the general investors, the common investors, because there's a huge swell of investors in India, and I think it's market's responsibility also to make it very conducive and easier for them to lap it up slowly, right? So, what is the trend that you are seeing? If you have a view, like are the retail investors participating to exit, or they are entering it as a long-term share, wealth creation opportunity? What
So
is
I
the
would
trend
say
that you see?
one you have seen post the pandemic, a swell of new investors, right? Both whether directly investing equity markets or investing in equity markets through mutual funds or other investment vehicles. And so I would say in many ways, this has been the democratization of the capital markets. And this also has happened in previous cycles, but this time the scale is at a very different level. And of course, you are seeing very strong participation in some of the best IPOs by public markets investors. And while there have been IPOs where public markets investors have exited, and particularly, you remember in Zomato there was a lot of you know concerns and talk downs about at the time of the IPO by a lot of public market investors. Yet eventually the IPO did exceedingly well. So I think over time, people will see and start experiencing this different set of companies. then they will have larger conviction on the long-term value creation in some of the new business models. So all in all, I would say that this trend of this new swell of investors, whether directly investing in stocks or investing in equity markets through mutual funds and other investment vehicles, is a strong positive for the Indian economy and to the entrepreneurial ecosystem in the country.
Remarkable to hear those words again and again, and we are very sure that it's going to be a total facelift for the financial well-being of the new wave of investors entering the markets and the ecosystem, which promises a great return to the budding investors and the existing businesses, to just go to the next level altogether. So now another question regarding the IPOs, Ramesh. So what is your perspective on the issue size of IPOs? Like X thousand crores the company is raising from the market. How should investors view this as? I mean, should this number mean something to them that they are looking to invest in IPO?
Yeah, so the size of capital raise, first to look at what is the IPO about. Is it about a secondary sale, which is a set of investors monetizing their investments, or the capital is being raised as a primary capital to invest in the business? I think fundamentally it's all about the addressable opportunity the company addresses. So sizes and what these companies eventually can be is a function of the potential market opportunity in India. And if you want to look at examples, and some of the errors that a lot of people make is try to compare the potential of Indian market with what is possible, what has been achieved in US or Europe. I think the country to look at, for example, and actually the country that's most comparable to India is actually China, and China is like a decade or so ahead of India in many categories. So if you want to understand the potential, look at China, what is possible, what has been achieved in the China in the last decade. And that will help you to size what these potential companies can be. And according to you have to understand whether the capital, is adequate or is it too much. And value creation will be a function of those opportunity sets and the way these companies execute. So it's a function of opportunity and execution, and number 3, valuation. This is the trinity that we have to focus on to identify the winners in the IPO segment.
Okay, great thoughts here, Ramesh. That's an extreme privilege to hear this from you. And now another question regarding the common investors. Should they see this new wave of IPO as an opportunity to generate wealth? And if they do see it like that, what would you advise them? Like when the market dips, makes room, creates a dip, should they let off their fear factor and buy more? Or what would be your general advice to common investors?
See, market volatility is a feature of markets. It's not a bug. It's like market volatility is a given feature of markets. Invest in equities is a long-term asset class. If you're investing in equities, please invest from your long-term savings, not from leverage capital or your current savings which you need for expenses. Then invariably you will end up exiting the Indian market, the market whenever there's a bout of liquidity volatility, and it is bout of volatility are assured. That's the nature of equity markets. We may not be able to forecast why that bout of volatility will emerge, but it will emerge for sure. And that's why the important thing is, one, to invest the right kind of savings capital into the equity market. Number 2, invest in businesses that you understand, where you're a user, where you see large potential. And I think it's also important, and I understand it's difficult for investors, but if you want to read one thing of the prospectus, please read the risk section. That may tell you a lot more about the company than anything else on what the risks you are taking in the business. And I think equity is an asset class which has to be held at least from a 3 to 5 years minimum, right? Over that period, equities deliver strong positive returns. So stay invested is what I would say, but have the right kind of capital invested in equity markets.
Wonderful. Just highlighting all the very key painful points that I think the new investors fall into. So Ramesh rightly highlights making sure that you're not leveraging your own capital like deep neck down, because when market volatility strikes, it's bound to happen. As he says, it's not a bug, but it's a feature. So I think I mean, important and vital points for our viewers here today that they are listening from such market experts. So now we've been keeping Anuj waiting. Let's move over to Anuj and get on with some questions to Anuj's side. So Anuj, very simply, for the benefit of investors, what is the process when an IPO bound company comes to you? Can you share?
Well, every organization or every investment bank would have their own process. But if I were to look at things today and the recent regulatory changes, companies can actually from start to finish, if they are ready, and that's a key element, how ready they are to go IPO. It's a process that can be culminated in 5 to 6 months quite easily. So gone are the days when you had to wait for at least 8 or 9 months. I think the timelines have got crunched down to, even in some cases, less than 5 months from start to finish, from kickoff to, let's say, listing. Uh, a company would need to appoint a certain set of lawyers alongside investment bankers to start preparing the documents and completing the diligence work for the IPO. This could take anywhere between 1 to 2 months, again, depending on the readiness of the company. And DRHP, or the offer document, would be prepared and filed with the regulator. This would also involve a lot of work from the auditors of the company, because they would be certifying the historical numbers of the company as well. And that's perhaps one work stream which tends to take some time, because the bankers and the lawyers may also need to get comfortable with the work performed by the auditors. There are a few other enabling agencies as well involved, but these would be some of the key aspects. Once the document's been filed, there are research analysts who publish their research on the company. The company gets into marketing phase along with the research analysts. And also in the meanwhile, the regulator SEBI comes back with comments on the documents. And again, depending on the complications and the kind of questions that they have, this process could take anywhere from 45 days to any amount of time, depending on the kind of questions and the number of questions that they have. So effectively, once you've answered the questions from the regulator and your marketing process has been predominantly done, that's when you file the RHP, the revised document, attending to all the questions, and you are in transaction mode. Effectively, you're in deal mode. And again, depending on how markets are at that point of time and the company's plans, you would take a few weeks to complete your final marketing process and completing the listing requirements as well before you launch your IPO. That would be in a nutshell the IPO process.
Yeah, a very nice, simple bird's eye view from Anuj, combining the regulatory process and the rigorous due diligence that they perform on the financial aspects, and then the objections from the regulators, SEBI gets cleared, and then they go into the marketing and goes live. So thank you, Anuj. Now, another question is that, have there been times that an investment banker would refuse a company to take them to the IPO? And what could be a very simple 1 or 2 reasons for it?
I think that's a very valid, I think that happens, that tends to happen. And again, all investment banks have their own rigor and processes as far as the diligence standards are concerned. I would say when a company comes to a bank to have plans for an IPO, evaluating various aspects, first of all, around the ownership and the governance structure of the company, and complying with the KYC norms becomes extremely important. So banks would run negative news analysis and pretty much exhaustively try and complete their diligence as far as the background of the promoters, the board of directors, the entire governance structures of the company are concerned. And those are perhaps the first litmus test that is applied by banks in terms of assessing whether this company is something they would like to take to markets or not. And at that stage itself, the screening happens and you do tend to say no sometimes. I would say secondly, during the diligence process, when you commence the formal diligence, there could be situations where banks could have questions which may not be satisfactorily answered, or you may come across certain information requirements which may not be able to get fulfilled by the company, and in which case also banks and underwriters would need to perhaps think about walking away from the transaction as well. And there have been instances in the past where such situations have happened.
Great, great. I mean, it's beautiful to hear. I mean, that does say, at the center of it is the investor's interest. They should have the opportunity to invest in the safest and the best bet that they would want to, pitch their own life savings into. So great words there, Anuj. Now another question, and then we will move on to Bala. He's been waiting. So the question is timing is very key to successful IPOs. So needless to say, but just on how do you see the current market scenario? Is there any sector that you would say more preferred or more favored in this rush of IPOs?
So you're right. I think timing is very, very important. The preparedness of the company, having a legitimate use of proceeds, all the stars aligning up as far as investors are concerned. All of these factors play into when a company can go IPO. And of course, the process that I spoke about, how quickly or in what fashion can you complete that satisfactorily.
Yes.
I think the current market environment is quite conducive for IPOs in general. We've seen IPOs this year, for instance, and some towards the end of last calendar year as well, have performed quite well in aftermarket post-listing. We've seen a few IPOs recently, especially in the month of August, that happened where the aftermarket performance post-listing has not been that great, which is a bit of a cause of concern for markets. But in general, I think the markets are quite conducive. Liquidity is out there, and investors are looking for good ideas to back good business models. And obviously taking advantage of these market conditions, companies and private investors are looking for monetization opportunities and opportunities to raise capital. So I would say we don't expect this scenario to change. Of course, as my fellow panelists mentioned, this could change any time because of unforeseen circumstances. There are factors like a lingering fear around a third wave, which could freeze up the markets. There could be geopolitical tensions in some part of the world. Inflationary pressures are also building up, and commodity prices could rise up with the rise in crude prices as well. So these are some of the factors to watch out for in terms of companies who are looking to go IPO in the coming months.
Thank you for your valuable opinions there, and it's great to hear from you that the market can hold this capacity for the IPOs going forward. But again, an unseen factor lurks in. So before we move on to Bala again, I would just like to extend a very warm welcome to all our viewers who joined us a little late. A good afternoon to all of you. I think the markets closed a little bit on the lower side today, so I'm sure this event is popping you back to good spirits. That's what our goal is. So, and all the videos and the highlights will be available on our social media channels. So you can just take a look at that and have a good time. So Bala, coming back to you. Now, since you have the pleasure of your company, and fintech and digital payments is the word to go by these days, right? So what do you think? Are there going to be more IPOs in this sector going forward?
100%. So again, as I mentioned in the beginning, I think MobiKwik is paving the path. Obviously, Paytm, and almost every fintech founder that I speak to are all looking to these as sort of bellwether, see how they're going to perform. But this is definitely something on everybody's radar.
Right. And needless to say, but how much impact do you think demonetization and unfortunately COVID in particular has had on propelling these digital and fintech and BNPL companies through the roof on a trajectory that's just like defying gravity? I mean, any thoughts there, Bala, you would like to share, or like the market always saw this opportunity and it just took off at this time? What would you like to share with our viewers?
So, I think the demon was obviously a surprise to literally everybody. But the demon was a huge positive for the whole fintech industry. I would say the modern Indian fintech industry was born because of demon. Um, and just digital payments took off, and along with digital payments, everything else took off. So I mean, today, almost everybody I know, you can go buy a cup of chai with your phone, and that is not even a question. As far as COVID is concerned, obviously it was a shock, and during COVID, it's been the business basically froze for a lot of BNPL players and a lot of other players as well. There are a few people who, for the business still went up, maybe online payment gateways and so on and so forth. But for everybody else in the fintech world, when you cannot go out and you're sitting at home, people who are spending less in at least in some areas. But what we're seeing is that these are very temporary, and just immediately after the COVID goes away, the business bounces back. We saw it in the first wave, we saw it in the second wave. Starting in June, pretty much everybody came out, and sort of life seems to be back to where we were, and then going up further, because now habits have changed and people are now going digital for everything.
Yes, absolutely, absolutely. So now, just a question on the side. I mean, cyber threat is something very real, and even Bitcoin is not aloof. We heard the huge thing a few weeks back. So, in your opinion, Bala, yourself, and how about the other fintech enterprises? Are they prepared to face this kind of challenge when when we talk about mobile loan payments, like small monies that people are trying to borrow? I mean, for an exigency or an emergency. So, I mean, is the industry prepped up and geared to handle this threat that is quite real and looming large?
Yeah. So, very good question. So we've already sort of seen the first wave of, minor, sort of fraud, and so on and so forth. And these, I think, people have been able to address. But I feel, and definitely at Frio, we are preparing for this, is the real threat. So far, honestly, the Indian markets and the Indian whole financial industry has been sort of viewed as a sort of small ticket, right? Even for like the large dark web networks like from Russia, and it was just not worth it for them to. It was just too small amount of money to be able to do fraud with. But along with the rise in all of this ecosystem, I think is going to be more interested in doing fraud in India, and I think that is coming. And I think it's in some ways it's a sign of sort of playing in the big leagues, in the sense that people think you're worth defrauding. But on the other side, I think we need to be prepared as an industry for all of this, and specifically we need to be careful that we regulate ourselves and we inoculate ourselves, because otherwise the Indian regulators tend to be very heavy-handed in coming across and saying you must have this, you must have that, etc. And like the whole two-factor authentication on every website you see when you type in your credit card was a result of sort of an earlier version of all of this, where no other Western country would have a need you to type an OTP when you buy something on Amazon, but we do. So, and it's a huge pain, a huge friction for the consumer. So we'll see things like this come in if we are not proactive about it.
Brilliant views there, Bala. Thank you so much. And one final question for you before we let you off the hook, and you can enjoy your other pastime. So, in the one simple sentence, Bala, what would you advise to the new investors or the investors already on the block? Like, what's a basic way to assess a company for investment? Leave aside all the gyan, all the huge books, all the huge things that go into a basic, simple advice.
Yeah, I think you need to have some understanding of what the company. Either you use it yourself, which in most consumers like a Zomato or a Free or a Money Tab, you can go to the website, download the app or whatever, and you know what it does. So you have some gut feeling of what it does. If it's an exotic thing that you don't use, some enterprise software or something exotic, some industrial parts, then try to understand, and like our other panelists have said, try to read something about it, right? Like Ramesh mentioned, like look at the risk section and the prospectus. Have some basic understanding of what you're investing in, not just because your friend is investing in or your brother told you to, was very sure that this stock is going to go up. Because if you do that,
Right.
you'll pay price.
Great, great. Thank you so much, Bala. Thank you for your words there. Let's move on to
Thank you.
Ramesh for the final set of a few questions to him and for the benefit of our viewers. So, Ramesh, what should be the investors be aware or more careful of, or give a plus point to what they read, how the company is going to use the money that is being raised in the IPO. Just a very simple perspective so that our young investors can follow. What should be they careful of and give a plus point?
Ceteris paribus, you would like companies which are raising money to invest in the business. That is the best use of IPO capital. And whether it is, it's as long as it's invested in the core business of the company, then it is the best use of capital. If they're trying to get into and diversify or acquire, like for example, acquisition-led strategy, growth strategy, is invariably has low odds of succeeding. Similarly, trying to get into very different domains where there are already strong players in that industry, they are strong leaders, then that is a negative. That's a strong negative on use of capital. And number three, you don't want to see the management team selling out of the company. You want to see them staying invested with the company. So I would say from a capital perspective, these are the three aspects that you should focus on.
Great, great, great. Thank you for that viewpoint, Ramesh. And one final question for you, because we are also running out of time. I'm quite sure it's a very valuable and august guest we have on our show, and people must be enjoying the various viewpoints coming from three key important people: a company owner, an investment banker, and a top market expert in investment. So we can stretch it by a few minutes. I hope our viewers are also enjoying the session. Final question to you, Ramesh. Anuj also pointed this out post-August or around that time. Some of the companies who went for IPOs had quite a dud period or lull period post their listing. So, what is your view of the market pulse and the investor mindset on on a whole, with Paytm and LIC yet to make their debut? I mean, what is the feeling that we are getting?
Yeah, so it is always difficult to predict, how people will behave in the future, and markets can change their tune in very short time. That is the nature of the beast. So we can't get undue confidence on how things will behave in the future, even near future. That is the nature of markets. For example, you had not long ago people predicting oil going to zero, and we have oil at $80, right? That is the humility you should learn from markets. We are struggling for basic shortages of basic commodities today, right? So a lot of these things were never predicted, right? So let's be humble about the fact that we don't understand how things will behave, right? I think ultimately, if you have what Bala mentioned, and and Anuj mentioned, is if you have a strong company, a product that people use, if the business has relevance, investors will invest. So mind you, there have also been great IPOs even in difficult market environments. And one of the greatest IPOs people don't know or don't remember in the worst market was Maruti Suzuki, way back 20 years ago, right? So as long as you will have good businesses, companies will go public. And ultimately, the performance of an IPO company is not about just the IPO. What really matters is how does the business does. Ultimately, stock prices over longer term reflect the free cash flows that companies and business and generate. So even if an IPO is weaker at the time of IPO, company stock is weaker. But ultimately, if the company does well, the stock will end up doing well over time. That is like the fundamental first principles of market. And so focus on the business rather than on the stock price.
Wonderful.
That is my
A flashback to Maruti and words of true wisdom coming from Ramesh, that fundamentals always rule the roost. I mean, right? So pay attention to the company, their business models, and if they are profitable, the stock price will follow in the long term. Beautiful words from Ramesh. So let's move on to Anuj. The final few questions before we end our show. So Anuj, we spoke about timing. Now pricing is also a very crucial area in an IPO, right? So how do you strike that fine balance between, say, the valuation of the company and the price at which stock is going to be offered, right? Successfully subscribe IPO. So how do you manage that?
Sure, I think it's a fine balance that you have to strike. I think a well done IPO is one where the company is willing to, or the owners are willing to leave some money on the table for the investors, and the stock actually trade after market performance. Because mind you, an IPO is just the beginning of the journey of a company in the capital markets, and the company will come back to capital markets either to raise primary capital, or the investors would like to monetize the shares that they own in the listed company. Hence, it's very important that the investors make money, and that does not mean necessarily in the first week after listing, but over a period of time. I think the sustained performance of the stock is what is going to be under scrutiny from investors, who, especially the ones which have a long-term perspective. But at the same time, if you leave too much money on the table and you have a 80-100% pop within the first week of listing, perhaps and that continues to be the case, then perhaps you've not priced the IPO very well. So the way one would look to price an IPO, it's going to be dependent on the fundamentals of the company and the business. The outlook, growth is going to be a critical factor, and then you look at the comps or the competitive peers, which may be in India, and in some cases the business models are comparable to models or companies in the world globally. So you would compare it to them and see what kind of parameters match, and hence try and distill from these various factors the ultimate pricing. Of course, you have the benefit sometimes of investor feedback as well. You, other than comps, you apply your own methodologies on valuation, which could be DCF, which could be various other earnings multiples. But ultimately, the investors will also provide you some sense on pricing, and hence it's more of an art, I would say, rather than a science eventually to price an IPO.
It is. Truly appreciate and just go by what you just said. And I think there was this recent defense IPO that just came and it shot up through the roof, I think 3x or something on the listing. So that's Anuj's take on leaving just enough on the table, not an 1800% shoot up on the first day. So Anuj, another question to you is gray market has now become a household name, and even the media talks about it openly, right? So what decides at what premium these stocks are being chased after in the gray markets, and does it, and if it at all does, impacts the price at which the stock gets listed on its debut?
Well, no, absolutely. I think you have a certain set of stocks trading in the gray market, and there are market makers or agencies which are making markets for such kind of stocks. There is, some amount of market frenzy, as well as some amount of advert ahead of an IPO of a company, and hence investors are looking at even unlisted stocks, and there is some amount of liquidity available in such stocks. I would exercise a lot of discretion and a word of caution here that gray markets are gray markets, and if you are stuck with a stock which is not fundamentally strong, the story of a company before listing could change dramatically as well, and the company may not see listing in the near future, and hence you may be stuck with a very illiquid paper. So I'm a firm believer that we should figure out ways and means to formalize this gray market, and with the new category of investors and the amount of retail inflows, both directly as well as the mutual funds pouring into the markets, I think investors are beginning to understand unlisted stocks or unlisted companies as well. And if we can formalize trading in such stocks, it will only enhance investor confidence as well, and the liquidity in such stocks.
Wow, amazing. That is something just, amazing. You were saying about formalizing gray markets. And I think that might be a very forward-looking statement. I really appreciate that thought coming from you, Anuj. How is it going to be then? You apply for the IPOs, you get allotted or not. and then formalizing the gray markets. That's a very interesting line of thought altogether. Appreciate your valuable insights, Anuj. Bala, Ramesh, Anuj, I thank you so much for being on our show. And I am absolutely sure viewers must have taken a leaf out of the words of wisdom and of great things about India that our August gathering here has to share with us. And the term and the speed at which the things are moving, and what is possible these days, and what is India looking at ahead in future. With China as a recent competitor, and now our own companies can dream of being a unicorn and get an exit here in India. So, well, that's it. Wonderful time with our panel here and the viewers. And we hope you have learned something valuable out of this show. And that is what our goal is, to bring something that's really valuable to a common investor, empower them, and this is empowering them. Having them here, a nice set of people willing to share their insights when people are putting their money into the markets, their hard-earned money, which they could get burnt from. And Ramesh, Anuj, and even Bala described what to avoid, what not to do, and what things to keep in mind before you go ahead and press that button buy, right? It might be an illiquid paper, as I think Anuj mentioned after a while. So quite important words there. So I invite you all once again to join ZoomStocks, participate with each other, let India have a new address where all the stock market investors, all the enthusiasts and experts can go and discuss freely with each other and just make this a whole new beginning. Let's have a new address where India goes to and talks about stocks, get empowered and play in our Big Bulls League contest. And I hope you will benefit from it and learn tenets of responsible investing as well. We'll be happy to give you rewards and prizes for that. And with that, I thank you everyone on our show, the viewers and the guests. And it's been a pleasure, a thorough pleasure. Wish you all a good health and a lot of success and profit. Happy investing. Thank you so much. Thank you so much. Thank you.